name is Atul Mehra and I'm the fund manager for the Motilal Oswal Large Cap Fund. Firstly, season's greetings to you and everyone in your family. I wish you a very happy 2024. So, as per SEBI categorization, large caps are companies which are top 100 in terms of market cap rank. So, if you look at the current market cap rank of the 100th companies, about close to 50,000 crores. So, the range of market caps for large caps is between 50,000 crores and about 17 to 18 lakh crores. So, that is the range of the large cap companies in India. So, basically, if you look at some of the longer term trends in large caps versus mid, small, micro, across these charts, large caps are at their lowest point in their history in terms of the price ratio charts versus these indices. You'll see that it is not just that the price ratio charts are on the lower side, even the valuations are on the lower side. So if you look at the large cap Nifty 100 PE multiple, it's about 21.9 times. So the valuations are on the lower side. If you look at the quality, which is the return on equity, so large cap portfolios, the large cap index today is at much higher ROEs versus the mid and small caps in that sense. And the third component is over the last 5 years, if you look at the share of large caps in corporate India revenue and profitability, that has only gone up. So it is not to say that the valuations are low because the growth is low, because that's not the case. The growth also is ahead of the rest of the market. So all the three components of quality, growth and valuation, the large caps today are favorably in terms of place. So what has basically happened in this space? So we believe like one of the key reasons has been flows. So if you look at FII flows over the last 4-5 years, more like from the peak that they owned in Indian equities about 22-23%, that has now decelerated and they own about close to 20% of Indian equities today. So the sheer interest of FIIs from a flows perspective has been on the lower side. Secondly, what has happened is the DII flows have been very strong, but if you do a further drill down of the flows of the domestic institutions, you'll find that most of the flows have been going towards mid and small cap companies. You have this, as we all know, like you have this very, very strong tailwind in retail demat account opens and stock trading on in terms of multiple retail brokers. So in our opinion, these have been some of the key reasons why large caps are favorably priced today versus the counterparts on the mid and small cap side. So we have a general election coming in 2024, and in our opinion, a lot of FIIs will be on the sidelines and they will want to see the final outcome before they act decisively. And once they act, most of the times, like they own close to 75% of entire India investments is close to in larger cap names. So as the flows from FIIs come back, you will see this in terms of get translated into much higher outcomes for larger caps as a space. So why large caps now from that perspective makes complete sense, because the valuations are good, the growth is fine, the quality is strong, and as the Indian narrative improves further as we get to the election phase. The answer to that is ACE. ACE is high active share, high conviction, and equal weight portfolio. So what do we mean by each of these? So active share is the key ingredient of active fund management. And active share of 50 to 60% towards 70% is what we ideally want to build in Motilal Oswal Large Cap Fund. Second is the C component of ACE, which is conviction. So as a house, we've always been a high conviction house. And with conviction in Motilal Oswal Large Cap Fund, we aim to build a portfolio which is up to 30 stocks, and which provides the right amount of diversification. At the same time, it provides the right amount of conviction on our key in terms of stock picks. The third is equal weight. So typically what tends to happen is in the category, people tend to cling on fairly high index weight components, and there's a general behavior towards closet indexing. It's a global phenomena, and which we see even in our country. So with equal weight, we want to make sure that we only invest in names irrespective of the index. So in summary, the endeavor is to build a high quality, high growth ACE large cap portfolio, which we truly believe in ourselves. A testament to that is the commitments that our sponsors have had to our funds, over 5,000 crores of commitments across all different funds that we run. And additionally, for me, all my money in equities has always been in the funds that I have managed myself. So this is going to be a fund where almost all my money in equity is going to be invested by myself. So that is the level of conviction that the house, the sponsor, the fund manager has, and we believe that we can make a difference in this fund in terms of delivering great outcomes for clients, and that is what we aim to do. Thank you very much for your time to listen to this video, and we look forward to seeing you sometime in person.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.